holy cow, it's pouring in. Yeah, I loved his book. And when he reads it on Audible, it's incredible. Like, did you listen to it on Audible?
No, I didn't.
Okay. All right. I'm going to say hello to everybody. I know we'll have some people joining. Feel free to have your video on, video off, whatever you want. I'm video on, even though it's a no makeup day, and I'm totally fine with that. And I think for the first time ever, I'm going to pronounce your name right, and I'm really excited. I practiced it. Just watch now. I'm going to get it wrong. So we have Moshe. Moshe?
Yeah, that's wrong.
No.
Moshe.
Okay. So now I'm going to get it right forever. And you can call me Rochelle. So guys, I'm really, really excited because Moshe is here to talk to us a little bit about finances. Moshe is my soon to be trusted tax specialist, lifeline, and financial, not advisor, but he's going to be like my savior when it comes to finances. Because if you guys are like me, or, you've started being as a freelancer, it takes a lot to figure out how to scale from being a freelancer to being a business owner and being responsible and moving out of survival mode and moving into a place where suddenly you have reserves and you have a plan and you're not just reactively handling finances. So I'll let you go ahead and kind of introduce yourself and start to say hi. And then just so you guys know, if you have questions, feel free to turn your mics on and say hello, ask any questions. And then I'll also be pulling some from the group that people asked earlier today. So take it away, Moshe.
Sure. But talking about name botching, I've been calling you Rachel. So I guess we're even.
Fair enough, because it's really, Raquel.
So, Rochelle. All right. My name is Moshe Amsel. I am founder and owner of Dream Builder Financial. I'm an entrepreneur just like the rest of you. I am here in all of these really cool online groups and forums because I'm an accountant that specializes in online businesses. So this is where I live. I live with you guys, and I know your pains. And the beautiful thing about specializing in one industry is that you get insight into a lot of different businesses. So when you have a challenge that you think is unique, it turns out it's really not that unique. And having a trusted advisor for your business that can help guide you through a challenge that they've seen time and time again is a lot easier than trying to figure it out yourself. I'm the host of a podcast called Dream Builder Financial. It's 3 separate words. So if you're searching for it and you put in Dream Builder, one word, which is really the business name, you won't find me. But the easier way is search for my name and you'll find me. But anyway, I'm there. My website is dreambuilderfinancial.com. And I help people achieve their dreams. That's hence the name Dream Builder Financial. I help people achieve their dreams through wealth creation using entrepreneurship and real estate. So real estate is really not something that I harp on because it's kind of a progression. You need to first have massive amounts of cash coming in, and then you need to put that money to work. So there's a plan once that cash is coming in of how to avoid paying taxes on a lot of it, shelter it from taxes using a combination of tax deferred accounts and real estate to do that. So, but I don't think we're going to talk about that today. But if you listen to my podcast over the course of time, you'll really get an insight to this entire plan and why it's really, really cool and makes a lot of sense and can significantly help you grow your wealth to the point where you're achieving all those dreams and aspirations that you have.
I'm going to pop in here real fast and just say, because I know that finances are definitely a topic that are, for a lot of people, nerve-wracking. And I just want to be really real with you guys and open about it. It's not something that you figure out overnight. It's not necessarily something that you figure out by yourself, especially if you come from a place where you were taught maybe unhealthy financial habits, or you've gotten into these patterns over the years. The second that we hopped onto a call, you realized that I was doing what's called bank transaction accounting.
Bank balance accounting.
Clearly, I am a financial professional, but that's one of the things I want you guys to know is that this isn't a place where you have to worry about judgment, and that's part of the reason why I'm so happy that I get to work with you. And that's one of the reasons why I'm excited to have you, because there's not judgment. People don't have to worry about you yelling at them. It's okay to be totally honest and to ask questions that we all deal with. I asked you probably 1 million questions on our call, and you're going to get 1 million more. So if people have questions, drop them in the chat, or feel free to unmute yourself. And then if they don't pour in right away, I've got a couple questions to hop on over to. So let's see, who do we have on this call? We have Katie, we have Casey, we have Elizabeth, and then I've got some good questions. So do any of you guys have any? Otherwise, okay.
All right, hit me with the first one you got, and
ready. So
give them a chance to formulate it.
Perfect. So we have Rizal, who says, what system or software do you use to keep all your business expenses and receipts together?
Okay, so that's a very good question, because there's the skeleton of your business accounting, which is your accounting platform. The problem is that the accounting platforms don't have exactly what every single person is looking for, so we have to kind of fill in the gaps. The problem is that people don't do anything, and then they just have a mess on their hands. They don't keep proper receipts. They don't keep proper track of what's going on. And you know that if you have, let's say you pumped some gas and it's a business expense for whatever reason, and you don't take a picture of that receipt and put it somewhere, it's gonna end up on the floor of the car with coffee spilled on it, and it's gone, right? And there's no way to know that was a business expense. So it's a great question. I personally support 2 platforms: Xero, which is spelled Xero, and QBO, which is short for QuickBooks Online. Now, I do have a background with QuickBooks Desktop, but especially for the online business owner, there's no reason to go to QuickBooks Desktop. QBO is the right product for you. Now, both of these products are cloud-based systems. What that means is that it's hosted by QuickBooks and by Xero, and you go in a web browser to a URL to log into your accounting software. The beauty of such a system is that, A, you can assign an accountant to your account, and they can go in real time and look at your data and do work for you without you needing to send them a file, not make any changes because they have the file, and wait for it to come back, and then start making changes again, and then you get backlogged and all of that. Those are problems of the past. The new online model really allows us to work in real time and work with much more relevant data because it's more timely. It's more up to date. You can automate the bank feeds. So basically you can hook it up to your bank accounts, and automatically the transactions get imported into the software. You still need to properly categorize everything, but there's a lot of the manual data entry has been taken away with these platforms. But to get back to the original question, if you want to scan a receipt and associate it with a transaction, neither Xero nor QBO have that built in as a feature set with their software. So they have, in programming speak, an open API. And what that means is that they make communication with their platform available to software developers, and an entire realm of apps has evolved over the course of the last couple of years. And there's probably well over 1,000 applications right now that integrate with these platforms. And these applications do all kinds of cool things. So one of the most common ones for tracking any sort of documents is called HubDoc, which many accountants swear by. And it basically allows you to send anything that's financial related to your accounting software. So it maintains all of that paper trail for you, and it integrates with your accounting software, so you can categorize the expense, you can put in a dollar amount. So let's say that you have an automatic transaction that bills to your account and comes in by email with a receipt, right? So the automatic transaction will get downloaded by your bank feed, and you could set rules to classify it properly, but you have no paper trail backing up that was actually a business expense. So you can take that email, forward it to HubDoc, and it automatically gets filed with that transaction. So now when you pull up the transaction, you've got that receipt automatically attached to it. You don't have to go pecking through your email to find it. And you can do the same thing. They have a phone application, so you can take a picture of a receipt with your phone, and as soon as it confirms it's filed it away, you can toss that receipt in the garbage instead of needing to collect it and try to figure out what it was 12 months from now.
That sounds really familiar. I think usually it's like Diet Coke that's spilled all over all my receipts, but okay, that's really helpful. Do you use different systems than you recommend we use?
No.
Cool. Rizal also asks, interesting question, any additional items that can be deducted as a business expense? So my guess is she's asking for creative solutions for deducting expenses.
Okay, so there's a lot of ways to get creative, and it's very specific to your own situation. So it's difficult to just answer that. I mean, books have been written, and there's 16,000 pages of tax code. So yeah, I mean, there's a lot there. I can talk about some of the commonly missed ones and some of the ones that people in this group might have pertinent to them. So one of the most commonly missed ones is the home office deduction. And the beauty of the home office deduction is that it's an expense you have anyway. So it's like the epitome of where you want to be as an entrepreneur with tax savings. If you can convert something you're spending money on anyway into a business expense, now you don't have to pay tax on that revenue that came in. So now it becomes income that's tax free. So the home office deduction can be a lot of money. For me, it's upwards of $5,000 because I live just outside of New York City. My real estate taxes are $15,500 a year. The purchase price of my home is over $400,000. So you amortize you depreciate the cost of the home over a number of years, 30 something years. So that's $10,000 a year, in expense for the house. Now, obviously my home office is just a piece of that, but it multiply, my, 10% of home office space, out of the entire house, multiply it times that $5,000. And that's really what I'm paying every year to be able to live in my house. So I'm paying $50,000 a year to live in my house. And now 5,000 of it, I'm able to write off as a business expense, which means that I'm saving the taxes. Now, just to understand what that savings is, as a entrepreneur, you pay something called self-employment tax, which is basically your Social Security tax, except that when you work for somebody, they pay half and you pay half. So you pay 7% and change out of your paycheck, and they pay, 6% and change out of your paycheck, and they pay 6% and change out of your paycheck. So, total of 15.3%. So when you're self-employed, you're paying the entire 15.3%. On top of that, you have your income tax. And if you live in a tax state, on top of that, you have your state income tax. So for me personally, when I have profit, every dollar of profit, I end up spending almost 50 cents on the dollar in tax. Did I just lose my Zoom connection?
I can hear you.
Oh, okay. It went away from the front of my screen. Sorry, I'm back.
You're good.
So let's say somebody is not in a tax state. And let's say you're not earning as much as I'm earning. So let's say that for you, it's 35%. Well, 35% of $1,000 is $350. Of $5,000 is $1,750, right? So, you now just saved almost $2,000 for not doing anything, just running your business out of your house. Now, what are the reasons that people miss this? Either number one, they're afraid to take it, or number two, they don't know to take it. So I think there's a lot of chatter about this specific deduction. So I think that most people do take it, but a lot of them calculate it wrong. And then some people are afraid to take it because they hear that it's a flag for an audit, and they're worried about these flags for audits. And my take on that as a tax professional is, if you deserve it, you take it. The place to be afraid is when you're in the gray area. So when the thing that you are deducting is a questionable item, that's when you can say, is this worth getting audited for? But if you used your home office exclusively for your business and you're operating a business, there's absolutely no reason that you shouldn't take it. If you get audited, it's really just them asking questions that are going to establish that it is indeed a valid deduction, but you'll be able to answer those questions and that'll be it. So there's really no reason to be afraid to take that deduction. Now, something that I am doing this year for myself to try and shelter some money from taxes is I have teenage daughters, and I am employing my daughters in my business. So I was paying somebody $40 an episode to write the show notes for my podcast.
Wow.
So I am now paying my daughter $10 an episode. So I'm saving $30, right? But I'm paying $10 an episode. So 52 episodes in a year, that's $520. Then if I have her write all of the tweets for it and the Facebook post for it, I'm going to pay her another $10. So let's say that I'm paying her $1,000 a year to do all that work for me, right? So I'm getting it on the cheap. My kid is getting spending money, but the first $1,900 that my daughter earns is tax-free, right? She doesn't pay income tax on it. I write it off as a business expense. So I now, by giving my daughter money, which other people might call an allowance or something, that they have to do anyway, by giving my daughter money, because she's giving me services for my business, it's income to her, it's an expense to my business. Now, she can then take that money and put it in a Roth IRA. And the Roth IRA, you can only put money into if you earned income. So because she earned that money, she now can invest in the Roth IRA, and that money goes in after tax. Because she didn't pay any tax on it, she's taking tax-free money and putting it into a tax-sheltered account that she'll never pay taxes on ever.
Oh my gosh.
So I basically have taken $1,000 and funneled it tax-free from my business into an account that when my daughter retires and takes that money, that $1,000, it'll probably be worth, tens, if not hundreds of thousands of dollars, that single $1,000 investment.
Oh my gosh.
So that's just one example of, where you can use your own personal situation to use the tax law to your advantage.
That's amazing. And this is going to be totally selfish. Can I employ my 6-year-old? Can I employ Dakota?
If you can justify that she's actually doing something that you would pay somebody to do, sure.
I'm going to teach her to tweet tonight. Amanda has a really good question. She says, any way to do something like this if you don't have children or dependents? And before you answer that, just a heads up, I'm going to turn my video off because my dad is walking around in the background. And so I'm going to turn it off so there aren't any distractions. But yeah, is there any way to do this if we don't have dependents or children?
So this specific strategy is best when you have a child, because children have that income threshold where they don't pay taxes. But you could employ a family member to keep it in the family, and then you write it off as an expense, but they still have to take it as income. The beauty is if it's a family member who is retired or is not working otherwise, their income will be so low that they'll probably pay a lot less tax on the money than you would have paid. So you are still funneling the money to, a family member or a friend that will end up with a lower amount of tax being paid on it. But you don't get the full benefit. For me, my dream is to build my family's wealth, to leave a legacy for my children, my grandchildren, great-grandchildren, and so on. So funneling that money to my daughter is all part of my grand master plan. The reality is that that's not everybody's situation. So that's not necessarily going to be helpful to somebody who doesn't have kids. But there are plenty of expenses that you have in your life that we can potentially justify to be a business expense. For example, your cell phone bill. So if you're doing social media and you're constantly posting for clients from your cell phone, and you're constantly talking on the phone with your clients, chances are we could make your cell phone bill be a business expense. Your internet in your home, and this is a gray area, so you really need to talk it over with your tax consultant, tax advisor. But and excuse me for the background noise. I'm actually working on site at a client today, so I do not have a phone system in my office. So there are, you can get creative with the various expenses that you have. And then for your home office, if you have clients coming to your office to see you, then you can deduct your landscaping costs, your maintenance of your lawn, 100% as a business expense, because you need to maintain a nice, clean, presentable property for people to come and see. If you pay for a music service, you pay iTunes $9.99 a month, or you pay Amazon $72 a year. If you play that music in your office while work is being done, then that can be a business expense. So there's a lot of household expenses that you have that can potentially be a business expense. You just need to start getting creative about, would this be considered a business expense? And I recommend that anything that's questionable, you run by a tax professional before you take it as a business expense. Because if, in the event that you are audited and you need to justify the expenses and why they were a business expense, the worst case scenario is that the IRS says, no, this is not a business expense. However, what that does to you is it means that you had more income that year than you reported on your tax return, which means that you owe taxes on that money. The problem is that they'll audit you 3 years after you filed. So now you have 3 years of interest on that, plus penalties for non-payment of the taxes over that time. And that penalties and interest is really where they get you. So, when you have an expense that's questionable, you need to always make that calculation. Is it worth taking the risk for this? How likely is this to pass the audit, pass through an audit? And that's really the sniff test. So nobody expects the typical entrepreneur to know the answers to these questions. That's where somebody like me comes in. Those are the kinds of things that you would run by us to make sure that you're treating those expenses properly.
I think that's a really good way to think about it, the sniff test of the gray area. One question that I have, and I know other people have asked this as well, I'm sure something like traveling to see clients is probably a pretty good example of travel that would be considered an expense. What about business trips with other people who are within your organization?
So if it depends on what the purpose of the trip is. So if you're sponsoring your employees, for a business retreat, and it's to reward them for their accomplishments at work, or it's to mastermind strategize for the business, then most likely the entire trip is going to be a business expense. If you're taking a family vacation and you meet up with a client, for lunch in order to justify the entire vacation as a business expense, that's a gray area. However, if you travel to a conference and you take your spouse with you, your plane ticket is 100% a business expense. Your spouse's plane ticket is not a business expense. The hotel stay, because you get one hotel room, 100% of your hotel stay is a business expense. So, and you could extend the trip into a vacation. However, the hotel stay during the days that are not business days would not be a business expense. Actually, the rules for what travel is considered business expense and what meals and entertainment are business expenses are very complex. And it's the best thing that you can do is every time that you incur such an expense, write on the receipt, or as you import it into your software, put detailed information as to what it was for. So for example, I went to a small conference out in San Diego where I spoke and I masterminded with some people. And obviously that trip was a business expense, but my wife and son came, and their plane ticket was not a business expense. The hotel was a business expense, but then here's where the gray area comes in, right? We went out to dinner. So the nights that my wife and son went out to dinner are not a business expense. Maybe. Now it could be that my dinner is a business expense because I had to pay for dinner because I'm not home. And I'm traveling. So there are rules about that too. But the entire dinner bill is not a business expense. However, one night I went out with two people in the conference who were meeting with me. They went out to dinner with me because they were thinking about becoming clients. Now, my wife and son came, but because the purpose of that dinner was to get new customers, and I was meeting with potential clients, that entire meal is a business expense. Now, meals are only 50% expensible, so it's 50% of it. But even the portion of my wife's and son's, because it was a group gathering that was, for the business and business was discussed the entire time, it is. Now, the only way that I can back that up is if I take detailed notes of who it was that was with me for dinner, what we spoke about. And, so you want to make sure that when you have an expense like that, that you just put some notes in it as to who it was and what the conversation was about, why it was a business expense, so that, 3 years later, when somebody says, oh, what was this? You're not going to remember, but your notes will. And the second that they see that you clearly documented it at the time, that's going to answer the questions right away.
That's really cool. It sounds like there just needs to be a ton of notes. The more notes, the better, would you say?
Yes.
Excellent. Do you guys have any questions? Feel free to drop them in the chat or turn your mic on and say hello. We're a friendly bunch. So we'll wait 1 second and then I'll go on over to the next question. I actually have a question from Amanda. As a service, and she's on this call, which is kind of cool. As a service provider, what taxes am I required to file and how often do I file them? I live in Washington State. I'm in my first year and it's been confusing so far. Every time I think I get it right, I get another notice saying you haven't filed your bleep tax. And no, that's not a swear word. That's a fill in the blank.
Okay, so
I don't know.
All right. So as a business owner, the most, we'll start at the ones that you certainly have, and we'll move down from there. Okay. So you're in the United States, so you definitely have U.S. Income tax that you need to file for your personal tax filing. Now, depending on the structure of your business, you may or may not need to file a separate return for your business. So there is a Schedule C that's part of your personal income tax return, and if you're a sole proprietorship, or if you're an LLC that has not elected to be treated as an S Corp, I'm going to wait a second, sorry. I don't know if that was disturbing to you or not, but it was to me. So if you are an LLC or a sole proprietorship and you have not elected to be treated as an S Corp, then it goes on the Schedule C of your personal income tax return. If you're a corporation or an LLC that has elected to be treated as an S Corp, then you need to file a separate return for the S Corporation. It's called a Form 1120S, and that actually has a due date earlier than the personal income tax return. So the due date for the 1120S is 3 months into the calendar year of the business, of the tax filing business. Now, not a business doesn't have to have a calendar year end. So when we talk about it like that, it can get confusing. But typically, most small business owners would have no reason to select a different year end than December 31st. So assuming that's your year end, March 15th is your due date for your Form 1120S this year. Now, Amanda has written in the chat that she's a sole proprietor. So, Amanda, your federal income tax return is going to be filed on your Schedule C, which is part of your personal income tax return. Now, there are some other things. So if your state requires an income tax return to be filed, then you need to file a state income tax return as well. There is also potentially sales tax that you need to be charging. Now, sales tax is a whole nother ball of wax, but if you're selling a product or services, you need to find out any state that you have nexus in, and I'll explain that in a second. Any state that you have nexus in, which means a legal presence, you're going to have to check out that state's rules about sales tax, and you might have to collect sales tax for them. Now, in many states that collect sales tax, they do not tax services. So if you're a service-based business, it's possible that you do not need to collect sales tax for your service-based business. However, it's also possible that you still need to file a return that says that you had X amount of sales and none of those sales required sales tax to be collected. Therefore, you have $0 owed. But failure to file the return, the state might turn around and say, you filed a Schedule C on your federal return and you filed with the state saying you had income from a business, but we don't see a sales tax return. We're going to assume that all of the revenue that you claimed on there was revenue going into the business, and therefore you owe us. Here in New York State, it's 8%. So if I had $100,000 coming into my business, they could turn around and send me a notice saying I owe them $8,000 because I failed to file a return. So I didn't tell them that I owed zero. Now, obviously, if you really owe zero, then at most you'll be responsible to pay a penalty for failure to file or a late filing, but you won't owe any taxes to them, and you won't owe any interest or penalties on those taxes. But it might still be something you need to file. So that's income tax and that's sales tax. Then the last thing is if you have employees, then you need to withhold payroll tax. And that's that Social Security tax we were talking about, that when you worked for somebody that came out of your paycheck and went on your W-2, as an employer, you need to withhold those taxes from your employees. So if you have employees and you're not filing that, then that's another thing that you'll get a notice for, and you'll get in deep hot water for not taking care of. So I don't know if this was helpful for you, Amanda, because I don't know your personal situation. However, if you still have questions, I'm happy to talk to you one-on-one about it. And the link to my calendar, and this is for anybody who's watching this on now or on the replay, if you do want to talk to me in person, dreambuilderfinancial.com/call, CALL. Actually, I'll put it into the comments real quick. That'll take you to my calendar. I offer a free 45-minute call. Dreambuilderfinancial.com. Okay.
And as soon as she's done talking, I will add that into the forums along with this training video. So if you're watching this at a later date, this is something where you'll still be able to click through. And is this good beyond tax season? So for prepping for everything, planning, etc.
Yeah, as of right now, I have this open to anybody who books a call with me. The purpose of the call is to, if you have a simple question, I'm happy to answer it. And also, if you have a more complex situation, it's to kind of get an understanding of the situation and then talk about what it would cost you to get it resolved, or to work with me, moving forward with whatever your situation is. So I do provide free value if you have a simple question to ask. But obviously the reason I do it is to bring in more business to my company.
Yep.
Ultimately, we're going to switch from a free intro call model to where we offer to take a look at your business for a small fee, and then come back to you with what you truly need. But today, take advantage of it, because you can get me on the phone for free.
And the one thing I also want to say, anyone who's listening to this, whether you're watching live or listening to the replay, when it comes to finances, and if this relates to you, feel free to say like yes in the chat or let me know. When it comes to finances, this is something that can be a really touchy subject, and it's very sometimes scary. It's almost like that elephant in the room that you want to pretend like it's not there. You want to not look into it, and you think ignorance is bliss. And in reality, you could be digging a hole that you don't realize that can actually be righted very quickly if it's caught early on. And so, I know that as we dive into my taxes this year, it's going to be a little bit scary. I'm not going to say the number, but there's going to be a decent bill. Now, if we would have talked a year ago, this probably wouldn't be the situation. So it's something that I'm going to really start recommending, is that as you start to build your business, you build it on a great foundation and have a plan. And so that's why I'm really, really passionate and excited about Dream Builder Financial. I'm really excited about you offering this, and we're working together. So that's going to be great.
Yeah. And Rachel, you just triggered something that I want to talk about also for Amanda's question. If your business is bringing in money, then you're going to owe taxes. And the U.S. tax system, and I'm speaking specifically from the United States perspective, but many of the countries follow the same model. The U.S. tax system is a pay-as-you-go system. When you work for somebody, they withhold your taxes from every single paycheck. You don't have the opportunity to hold that money till the end of the year and then pay them all at once. And as a matter of fact, it's the other way around. The tables are created in a way that most likely the U.S. is holding your money till the end of the year and then sending you some back. Mm-hmm. So when you're a business owner, nobody's withholding that money from your paycheck. And there's another system called estimated tax payments that you need to do. And 4 times a year, you have to estimate what your taxes would be and send a check in. And if you fail to do so, there's penalties involved. So even if you have the money sitting there in a bank account waiting to go, if you didn't file your estimated tax payments on time, you're going to get a penalty for late payment. And that gets calculated on your annual tax return.
And so one of the things that's important to remember is financial responsibility is what it comes down to. It sounds so sexy, doesn't it? Financial responsibility. Wow, we're all grown-ups now. It's kind of like working out. You know, it's something where you know you need to do it, and it's not easy at first. Wouldn't you agree with this? But as you create a plan and you get used to it, all of a sudden you look back 6 months and you're like, oh my gosh, look at this journey. All of a sudden I feel confident. I know what's going to happen. I'm not stressed about the state of my bank account. I know what to plan for. I feel prepared for tax season, for hiring employees, for maybe someday selling the company. Wouldn't you agree it's kind of similar to working out?
Oh, absolutely. There's a ton of similarities between the health and weight loss industry and the personal finance and business finance sector. And I draw parallels all the time because at the end of the day, it's all human psychology and emotions, and just people making poor decisions because of mental blocks that they have or because of lack of information. So yeah, I mean, you can get fat at the waist, or you can get skinny in the wallet, and those are the same thing. And that's why I'm a profit first professional, and I'm a big pusher of profit first as a system for businesses. And I'm not going to get into the details of what it is on this call, but one of the reasons that I believe so heavily in it is because it helps you build behaviors and it helps you exercise muscles that you don't normally do. And it works within the confines of the typical human nuances that we're all operating in. So, it doesn't try to take away the fact that you look at your bank balance to make business decisions, but it helps you funnel that bank balance through a system that is going to take out the important things, like tax gets removed before it ends up in the account you're looking at to make your business decisions. So you're not looking at money that's not yours and saying, oh, I've got plenty, I'm going to go and spend X, Y, Z to build my business, and ending up making a decision to spend money that you really don't have.
I love that. It's one thing, I think I've mentioned it a few times in SMU, because when I read Profit First, it was kind of like almost like a punch to the stomach when I first started it. I was like, oh my gosh, yes, I'm bringing in money, but my mindset about building a business is really unhealthy when it comes to finances. So when I first started that book, it felt like I said, like a punch. And then all of a sudden I was like, no, this is going to be really, really good. And then I didn't act on it for like 6 months. So now I get to work with you and you're a profit first professional. And so that's amazing because now I'm not going to have to worry. In 6 months, 12 months, we're going to look back and be like, whoa, look at this journey. So it's something that I recommend reading, especially if you're in a place where you're unaware of where your finances are. That's the best thing to say. Like if you are uncertain where you're at with finances, with taxes, with expenses, Profit First is a great book to read or listen to on Audible. And then also there will be the link to set up a call as well. So do you guys have any other questions? I feel like there have to be a couple. Maybe.
Everyone here is from Canada, right?
I actually think this call is mostly US. Let me see. We've got half and half. Okay, so Amanda says yes. I think she has a question. She has really good questions.
Amanda, why don't you unmute yourself and ask us your question?
I actually don't think I've ever heard Amanda's voice. Not yet. Maybe.
Hey guys. Sorry, I had some stuff playing in the background. So can you hear me?
Yes.
Okay. So my next question was, if you pay someone a referral fee for like finding your business, is that a write-off at all, or how would you?
Yeah, absolutely. It's a marketing expense. It certainly is a business expense. You just need to be careful because this is another thing that we didn't talk about when you asked me what forms need to be filed. If you pay any single contractor, person, company, $600 or more directly for their services throughout the year, technically you're required to file something called a Form 1099, 1099-MISC, miscellaneous. So, depending on how much that referral fee is, you might have some more paperwork involved, but it absolutely is a business expense. And to the person receiving it, it's income.
Awesome. Okay, cool. Thank you.
Interesting. That's a really good question. I wouldn't have even thought of that.
Yeah, if you've heard some people who are, they're on the fence about whether to take on affiliates, and then they say that they don't want to take on affiliates because it's a nightmare with the paperwork, with the 1099s. Technically, you need to get a Form W-9 when you take on a vendor or a contractor that you're going to start paying. So you have to kind of collect these W-9s from all these people. But the beauty is that the system has changed over time. And today, if the money is going through PayPal, PayPal issues the 1099 instead of you. If it's going, if you're paying by credit card to the vendor or the contractor, the credit card company issues a 1099 to them. So it's really if you're writing a check or you're sending money directly through ACH that you're on the hook for doing the 1099 form.
That makes a ton of sense. And that's why the affiliate...
I'm glad it makes sense to you because it makes no sense to me. But...
I don't believe that. There's no way.
I mean, it makes sense to me to reduce paperwork. I just don't understand how PayPal knows, that this person, that this gets a 1099 and this doesn't. And I just don't understand that whole system, but I don't need to. I'm not PayPal.
Thank you, PayPal, for making life so wonderful. Katie says, I keep writing questions and you answer before I finish. This is so helpful.
I'm in your head, Katie.
If you have a question, you can unmute yourself and ask it really fast before he quick answers it. So then, no, just kidding. I think we have time for one or two more questions. And then I have to run to a client call, which will be fun. And then also, I don't want to take up your whole day because I really, really appreciate you taking the time to put this together. And I think it's been really, really helpful for people, especially as they watch the replay, especially as we get into tax season. Yay. Well, we're in.
Yeah, well, we're almost out of tax season, actually. So, to those of you who have been procrastinating, just so you know, March 15th is 14 days away. So if you have an S Corp, you have 14 days to get your taxes in order and filed or to file an extension. And actually, I'll talk about extensions for a second. But your personal income tax is April 18th is when it's due. Not the 15th. It's extended this year because of holidays. Holidays you've never heard of, but they're still there. So April 18th is the personal income tax due date. Now, I'm sure you've heard of filing an extension. And the only reason to file an extension is if you are receiving income information from an entity that either filed an extension or hasn't filed yet or hasn't provided it to you yet. So for example, if you're a partner or you're an owner in another S Corp, usually if you're involved in real estate with multiple people, you're going to be getting something called a Schedule K, which has to end up on your personal income tax return. And that information is required to do your filing. So then you might need to file an extension. But the misnomer is that if I file an extension, I don't have to worry about paying it right now, and that's not the case. You have to pay by the due date. So you have to make a assumption as to what your taxes are going to be, and you want to assume on the higher side, not the lower side. You don't want to end up owing money because if you extend, you're going to have till September or October to file, and then that's a lot of months to pay interest on taxes you haven't paid.
That's a lot of interest that can rack up. Would you say that interest is one of the things that kind of sinks people when it comes to taxes?
No. What sinks people is having the wrong calculation. So it's very easy. If you think about it, if you were off by $300 a paycheck in your day job, or $200, $100 a week, $150 a week, on your taxes, At the end of the year, that's $5,000.
Mm.
So now you owe $5,000. You might not have $5,000 in the bank. So the biggest place that people go wrong is either not making estimated payments, spending the money in their business, thinking, oh, I'm gonna, we'll figure it out at the end of the year, or taking the money home and spending it at home, which is worse. Spending it in your business, at least you could potentially have a business expense out of it, and lower your tax bill. But what they really do is they think that they have all this money available to them. They take it home, they live, they spend it, and perhaps on things that weren't necessary, or maybe it was necessary. But now at the end of the year, they haven't paid any taxes, and now they have a bill of $15,000 or $20,000, and they can't pay it. So now you file your return on time, but now you have penalties for late payment and the interest on that. Interest is not that high. It's the penalties that really get you. So, penalties for failure to pay during the year, those estimated tax, failures to pay, and then failures to pay for people who just ignored it, didn't file anything. And then 2 years later, 3 years later, they're getting audited, and now they have to go and file returns for the past 3 years. Those are the people who you hear about, oh, do you owe $50,000 or $100,000 to the IRS? Well, we can, help you out. And those advertisements that you hear. That's usually how people get into hot water. There are some scenarios that are not in your control that can get you in trouble. So, for example, if you borrowed money to purchase a piece of real estate, the property went down in value significantly, and you ended up short selling or foreclosing on it, when that debt is forgiven, it's technically income to you. So, in the housing bubble, the IRS had a rush to actually make a rule to allow people to exclude that, because so many citizens were being hit with these, $150,000 or $200,000 of income, because they took, the bank just forgave them on the loan. So now they receive this 1099 at the end of the year, because all this money was forgiven. And now it looks like they had, $200,000 in income, times 30% in tax. That's $60,000 tax bill.
Holy crap. That's a lot.
Yeah.
Elizabeth had a question that's really, really good, and then we can wrap it up after this call. And I forgot about it because it was in a separate thread. I think I asked twice if people had questions. She wanted to know about how you handle conversions between different currencies. So let's say, for example, you have a client in the UK and you're in the United States, just as an example, and the client pays you in their currency.
It's a very good question. And the answer is it depends on the type of accounting that your business is doing. So there's two types of accounting that you can two main types of accounting that you could be using: cash basis or accrual basis accounting. And this is going to go way over your heads. So, I don't want to make your head spin, but basically cash basis accounting is, we look at the cash that comes into the business and the cash that goes out of the business. And we don't care what happened behind the scenes. So with cash basis accounting, we would look at that money after it was converted to US dollars. And we wouldn't care how much it was originally and what the conversion rate was, and whether you gained money or lost money in the process of how long it took for that money to be converted from one currency to the other. In accrual basis accounting, the whole idea of accrual basis accounting is to be able to match revenues and expenses to each other, and therefore everything is time-based. So as soon as the money comes in, sorry, give me 1 second. So as soon as the money comes in, the revenue gets booked. So you book the revenue at the conversion rate at the time, and then when it gets transferred, if there's a difference, you either take a gain or a loss on that conversion. And it's pretty complex. If you have this situation and you're doing accrual basis accounting, use an accountant. Don't try to do it yourself. And they'll do all that for you. But probably 98% of the businesses in this forum, in this Facebook group, are using the cash basis method.
That makes sense, but it's definitely over my head. It's probably over everybody's head. And that's why I think it's going to be so important for my business, at least, to work with somebody so I don't have to figure it out. It's like when our clients hire us for social media, they're hiring us because they don't want to figure it out. It's like a foreign language to them. You guys know that social media is like the back of our hand, and it's the same exact thing with finances. At least
I love Elizabeth's response. Okay, thanks. I'll have to figure that out.
AKA, oh my gosh, this is so much. So
no, I'm Elizabeth, and I don't want to pick on you because this is the issue that entrepreneurs have, is that we believe that we can do everything ourselves, and the reality is that sometimes you need to recognize that having a professional do certain parts of your business for you is actually the right way to go. Accountants are one, but attorneys are another. And hiring an attorney at the beginning to create your contracts for you, to make sure that you're properly insured and protected, and that your personal finances are separated from your from your business finances, and then an accountant from tax perspective and a business structure perspective. Forget the consulting that we do and the business mindset that we can help and bring to the table, but just from the legal stuff, from a tax perspective, spending the small amount of money that an accountant and a lawyer cost in those situations is a lot better than coming to us when you're in hot water, and then it's far more expensive because now you haven't done things right and you're going back and trying to fix a mess, and there's a lot of time involved, and we're not cheap, So, I mean, my business is not an hourly based business, but if somebody comes to me for an audit, or if they come to me because they're being sued and they need a financial expert, those cases are hourly, and my rate is $350 an hour for that. So, you don't want to be on that end of the stick. So
yeah.
don't try to figure it out yourself. Bring somebody on, and get it done right the first time.
I could not agree more. Well, I think this wraps up a lot of amazing questions. What we're going to need to do is next year we're going to need to have you on before January, or maybe just at times throughout the year, and I can be like, this is my go-to guy for finances. So this is who I recommend talking to. Anyone have any last comments? Has this been really helpful? I know it has. I'm sure everybody's kind of multitasking and taking notes and stuff. So if it's been really helpful, say yes in the chat. If you're busy, that's fine too, but I'd love to know. Yes, Amanda says yes. You asked some amazing questions. Active listening. And you've worked a lot with freelancers in general, haven't you? And business owners. That's kind of your area of expertise.
Yes.
What is the first step that you recommend then for anyone who's watching the replay or is watching? Are you still there?
Sorry, can you hear me?
Yes, I can.
I don't know, something happened with my audio. I just took my headset out and put it back in. So you were asking, what is like the first step that somebody should take? It really depends on where they are in business. But if you have not yet started using accounting software to track your business, that is the first step. I mean, there are steps before that. Create a business plan. Get organized in your vision and where you want to take the business. But you got to be able to look back at how you're doing. And a spreadsheet is not going to cut it. Looking at your bank balance is not going to cut it. You need to be able to look at how you did last month, how you did the month before, and what are you projecting for the next month. And if you just are so busy with the busy work and not focusing on the end result, then you're just setting yourself up for eventual failure, because at some point you throw the towel in and say, this is not working. There's so much that you can do with money just by knowing where you're at helps you make the right business decisions. If you have no idea, then you'll just spend based on emotion. So if somebody launches a new program and you're like, oh, Marie Forleo is launching B-School, so I'm going to spend $2,000 because I feel stuck. I feel like I'm not making any progress. But you don't have $2,000 to spend. If you had your numbers in front of you, you'd know that. And if you looked at your numbers, you'd also know that you are making progress. It's just not as quickly as you thought it was going to happen. And just by getting a little bit focused on, on the financial side can actually give you a lot of reassurance and can also guide you in making better decisions, better business decisions moving forward. So if you're not already using accounting software, you should use it. And I'm going to throw one last pointer into that, and that is don't choose the accounting software first and then the accountant. And I have an example that I heard from one of the big accounting gurus that I hear speak all the time. And he basically said, if you needed brain surgery and you were seeking out the top brain surgeon in the world, you did weeks or months of research choosing that brain surgeon, and you finally meet with that brain surgeon and he tells you that he's going to use a certain procedure, you're not going to turn around and say, no, I want you to use this procedure. Right? You're going to, whatever he says is the best way, you're going to do because he's the guru. He's the one you chose. If you choose the software first and then you go and choose the accountant that's best for you, and that accountant doesn't support that software, well, now you got to switch. So you want to choose your accountant, make sure it's a right fit, and that's the person you want to work with, and then have them tell you what software that they support and that they encourage you to use. And then they'll help get you set up with that. Either they'll do it with you, or they'll refer you to a bookkeeper, or just point you in the right direction of getting started.
Excellent. I think that this wraps it up. And I'm going to say it again, and you're going to correct me if I'm wrong, because now I'm all like paranoid about saying it wrong. Moshe.
That's correct.
You did it. Yes. Okay. I'm going to remember that. Okay. So Moshe, thank you so much for joining us. I've already gotten tons of comments that this has been really helpful, and there are going to be tons more people watching this later on. Anyone who's first starting, remember that this is a starting point. It's a way to build a foundation for a healthy business so that you're not feeling like you're playing catch up for the next year. So thank you so much for sharing all of your insights with us. And the link, if you want to set up a free one-on-one, which is a limited offer, and I'm not an affiliate, I'm just going to be a very pleased client of Dream Builder Financial. So the link is in the chat, or if you're watching the replay of this, it is available in the forums right beneath this video. So thank you so much, you guys, and I hope you all have such an amazing rest of the day.
Raquel, thank you for having me. I appreciate it.
Touche. I'll talk to you later, everyone.